What's going on, guys? Ham Chop, what's going on? How are you? Good morning. Paradise, how are we? Jameshid, Colin, Ian, what's going on? What's going on? Happy Sunday, guys. Nathan, how are you? Awesome, awesome. Just going to give everyone a couple of minutes here. This is a free session I posted all over social media, so this is a really important session. I prepped about 2-3 hours for this one, so I'm going to be quick and efficient. So if you guys have a notepad or your laptops ready, get ready to take some notes, because I'm going to be talking through some things a little bit differently today and more of a bigger picture rather than sort of an intraday weekly perspective, because I think we're at some really key pivot points that I'm sort of slowly starting to see on the charts. So pretty excited for this session, guys. What's going on? Amon, David, Shane, Mayo, Alvin, Roddy, how are you guys? Thank you. Already 50 people jumping on. Excellent. It's going to be an awesome walkthrough today. And as I said, price action and technicals run this market, so we're going to jump right into it soon. But just give everyone a couple minutes, because, everyone's coming from all over the place, all over the world, all over social media. So just give everyone a couple seconds, guys. I appreciate it. Taylor, how are you? Jaheem, Mohammed, what's going on? Chris Hagedorn, how are we? Thanks for jumping on, guys. Happy Sunday. Awesome. Just give everyone a quick, we already have 65 people in the first 30 seconds. Just want to get to about 100 folks as usual, and I'll probably start the session then. Just do some quick posting here and there. Live now. And we'll get it going. Awesome. AK, how are we? What's going on, Jay? Anytime, man. Anytime. I love doing these sessions. Not only does it help you guys, it also helps me, because, then I start trading and I see the technicals and, price action levels are being hit. And, immediately I'm getting snap of the fingers in my brain, like, nope, this is where we're going long. This is where we're shorting. Here are my targets, and I have it all. So this is really, I love these sort of sessions. They're really helpful. Okay. So today's session, guys, is going to be quick, about 30 to 40 minutes max. I don't want to do an hour and 15 as they normally do. About every month, I try and do once a month session to just update us, refresh us where we are in the markets, what we're looking for, how we're performing, whether we're long or short, and talking through a lot of the technicals. Because in this market, guys, it's craziness. You got, you have multiple funds. You got day trade shops. You got hedge funds. You got mutual funds. You got algos. You got the Fed, you got everything going all in one. You got media, you have positive news, negative news, positive news, negative news. And the markets are moving really quickly right now. And I think it's important sometimes, and that's what I took today's session, to really take a breath and say, where the hell are we on the charts? And not only a daily chart, not the 5-minute chart, which I normally trade, not the 30-minute chart, which I normally trade. Where are we in a bigger picture, multi-week, multi-month, weekly, monthly chart? Because that's how a lot of bigger time frame traders trade. And that's how algorithms actually also trade. So it's important to look at the larger grand scheme of things and where we are. And we're at a really key pivot point, which I've discussed this key pivot point the last 2 or 3 months, and saying that we actually could get here. And I am actually in awe and in shock, and we are actually got here. And I'm going to talk through some of those points on the global indexes shortly. But for those just joining us, I appreciate you guys. For those coming from Webull, I appreciate you guys. I know, you guys always support me there over the years. Very loyal. I have about 55,000 followers on Webull, so I really love you guys. I always, I found a lot of you awesome. I really appreciate the support on Webull. It's a great platform. I think it's probably one of the better day trade brokerages around. It's got a great community, great learning center. I really do love Webull. That's what I use for the small accounts and stuff like that. As well as everyone joining us from StockTwits. Welcome, guys. Welcome if this is your first thing. So if you guys haven't seen any of the videos, definitely recommend checking them out. They're really helpful. I dive deep into the technicals and talk through where and why I take trades. Which is really important because it helps with, setting losses. It helps with cutting losses quickly. It helps with price targets and taking profits, when to scale out, where to scale out. So it's really important, and really that's what it comes down to for trading. So appreciate you guys jumping on from social media. This is a free session. If you guys do want to follow more, you can follow us in the Spud Zone Discord itself. We have about 33,000 members in this Bud Zone Discord, so you could come check us out. The options channel is active 24/7 a day. Tons of brilliant traders in there, absolutely crushing it on their small accounts, large accounts, wherever they are within their trading journeys. Then we also have a good sort of main trading floor for large caps, small caps, and other stuff like that. So highly recommend checking us out. My tech team will post the Discord invite link in the chat on the right-hand YouTube column here on the right. But without further ado, we have 100 people. We just hit it in the first 2 minutes. That's excellent. And we're going to sort of jump into today's session. I did not put a sort of a planning session together today, but I sort of had all my my thoughts and things to go from. So today I wanted to discuss through, the first thing is we're going to talk through where we are on the indexes. So we're going to cover SPY, QQQ, and the Dow Jones. Okay. Then I want to talk through the VIX, because the VIX is extremely important. That's a volatility index for those for those of you who don't know. And where we are in the VIX is extremely extraordinary compared to what's happened this year, all the events that have happened. And then I'm going to talk through some sort of chart plays exactly. I'm going to jump into where the charts are. We're going to talk through about 6 large cap names and potential trade ideas you can play off of these names. And they're not going to be like a daily, weekly, monthly put. It could be a longer time frame. So 3 or 5 months puts or calls, depending on the trade idea that I'm thinking that is aligning up with the chart. So I'm going to talk through about 5 or 6 of those large cap names as usual. Then for the small cap lovers, I'm going to talk through about 2 plus about maybe about 3 or 4 small cap trades and charts that are showing some momentum to the upside. So maybe some of you want to maybe write on your notepad or write on your laptop notes. That should be watched the next couple days or weeks. Okay, and then obviously, and that's really how we're going to do it today. So indexes, large cap with the technical deep dive for about 10-15 minutes, and then our last section is going to be the small caps. And then we're going to do about 10 to 12 minutes as usual per Q&A. This is when you guys could ask any questions for me or the community, and I'm going to obviously help answer them as best as possible. Now, this is a very tough and choppy market, guys. It's not like the past 3 or 4 years when I've been trading where it was just easy to turn thousands into millions, and it's much more complicated than that now. There's not a lot of free money out there. The Fed's dampening a lot of the liquidity. It's a tough trading environment. There's long shorts, and it's really challenging to navigate that. The best way to do it is really sort of hawking and studying that price action. And we're going to sort of talk through a lot of that today. Okay. So here we are in December, right? The last time we did a session, as probably 100 of you guys on here, many of you guys were on the last session, was in November, right? It's about 2 or 3 weeks ago we did this session, maybe even 4 weeks now. And the markets were sort of in this no man's land. We were in the 370s, 380s. And everyone's like, oh my gosh, where can we go from here? But as I said, we just opened up the charts. We did about a 30 minutes to an hour session on the SPY and QQQs and how we could get this massive bear market rally. And here we are 3 weeks later, just 3 weeks later. I think the S&P's up like 20-something% off its bottoms here when it dipped at 350. So impeccable moves, guys, to the upside. Extraordinary moves. And in such a quick time. You have people making 2-3 year gains in like 3 weeks. I mean, it's crazy. And this is what typically happens in bear market rallies. I've studied the 1970s. I've studied the dot-com bubble. I've studied 2008. 2008, and then we also had 2018 with some Fed intervention. I've seen a lot of similar tendencies. And what happens is things get so emotional, and there's a lot of news headlines, and people, fear of missing out if they don't buy a dip, and they feel that they have to buy when things are crashing, or vice versa, they have to sell when things are crashing. So things get a lot of, very emotional when volatility comes, because there's a lot of losers and there's a lot of winners on each side of the trade. And so how we're going to talk through today's market is I already actually have my SPY levels, and I've had these levels the past 5 months, guys, and we've been in this crazy trading range, but here we are coming to the top of the trading range. And this is a line that I've had now for 4 months, guys, the SPY. The 200-day moving average at the S&P 500. Now, these are all your top companies, basically in the entire United States. So this is your bigger mega cap weightings, your bigger, larger cap weightings. These are what we call mutual funds. People are buying these, the S&P 500 within their funds. So this is the best way to sort of look at a global or even global index for how stocks and the markets are performing. S&P 500, we're approaching what we call the 200-day moving average. I took all indicators off for technical reasons so you guys can actually see where we are. This chart here shows we have a technical moving average around 407, 410. That is exactly the price target I gave for my final target of this bear market rally. Now, keep in mind, we were calling for the bear market rally down here, and people were sort of like, I don't think so. I think we're going to crash. We're going to go to 330. And I said, I just don't see it. The sell pressure wasn't really there, and we never got that follow through. And so here we are now where I feel that we're actually getting FOMO to the upside. And what I mean by that is now everyone's like, all I see on social media is, oh, the market's rigged. Oh, recession's canceled. Oh, all this. Oh, all this. And now it's only positive news. And all we're seeing is positive news. And that kind of worries me a bit because it seems like people forgot that we've been trading in a bear market for basically the entirety of the year under the 200-day moving average. Now, for those new traders that don't know what a 200-day moving average is, that basically just keep in your mind, in your head as you trade every single day or trade every week. 200-day moving average is basically the line where hedge funds, mutual funds, algorithms, everyone trades off. It's a technical level that everyone uses as a trader. And I'm not talking retail, small caps. I'm not talking like small time traders. I'm talking big hedge fund, algo, macro shop traders. So when you get above or below this trend line, there's usually a buy or sell switch. And that's why I say we're at such a key pivot because the S&P 500, the SPY, has now hit that 200 moving day, which we've traded below basically, I would say 85-90% of this year we've traded below the 200 day. Now, in an actual trader's mind, anything below a 200-day moving average, guys, so you also know, is considered bear market territory. So we've been trading in a bear market for over 200 days now, guys. And so we're finally approaching that sort of switch. Now, are we going to reject the 200-day, trend back down, and maybe retest these lows or blow through them? I don't know. Probably. Maybe not this year. Maybe we see it next year. Now, there's potentially a good chance we could overshoot this 410 level and maybe get in the gap here. I'd call this the gap, 410 to 420, maybe even a 430 max. That's where I think this bear market rally ends. I think it will end in this zone here, or maybe even in this zone. It might not even break the 410s, and maybe we retrace. But I think this sort of level in here is where you want to be potentially selling out and scaling out of long positions. And why I think that is because we've traded below it the entirety of the year. And you have to keep in mind, right now, people are saying if they missed a sell opportunity all year long because they couldn't get out and they're just holding and holding and holding and hoping and hoping and holding, they finally have an opportunity to get out with even money on a lot of these names. You have some names that are up 30, 40, 50, 100%. We have Netflix. Netflix is up 110% off its lows in 4 months, 110%. I'm going to talk to that chart later. I mean, some of these drastic moves to the upside, where's the top? Right? You have some names trading at all-time highs in the Dow Jones. I'm going to talk through that next. There are some incredible moves happening behind the surface. Even though everyone's saying it's a bear market, it's a bear market, it's a bear market, there's actually names that are completely blowing out, outperforming, and are trading at a 10, 15, 20 times higher PE than they've traded over decades of time. And I'm going to talk through some of those names, which I think there's some great trade opportunities in those next. But here's the S&P, right? So I think 410 is your key pivot point. And how I've said positioning the trade is I think we could have this nice end of year rally, but keep in mind this week, we don't really have any events coming up. Okay. So the next week, the following week, next week, we have FOMC, we have Powell, we have, and we have the height rakes. So we don't know, how many bips the rates are going to go up. Are they going to go up 50 bips? Are they going to go up 75 bips? What's priced in? What's not? No one really knows. The algos and price action will tell us next week. But I think there's a small window of opportunity, maybe Monday through Wednesday this week, where we could see some more volatile, sporadic moves to the upside, potentially, unless some new, some headlines come in or there's more selling pressure than normal. We do have a huge OPEX, which is, for those that are new to trading, which is a huge amount of expiration, contracts expiring on December of 16th. That is also around the Fed time. So we could see some major volatility going into next week. And I think it's important as a trader to maybe have some hedges going into next week. I'm going to talk through some of the trade ideas on the next, the next couple slides. QQQ, quick update where we are. QQQ is the underperformer. This is the NASDAQ sort of 100. This is the underperformer of 2022. This is down about 28 to 30% on the year, while the SPY is down about 15%. So you talk about underperformance. This is your mega cap techs. These are your these are your big mega cap techs. These are a lot of small cap technologies, a lot of med cap. Everything's sort of stuck in here as a technology thing, right? Higher interest rates, worse for technology. Higher interest rates, better for dividends, better for sort of organic players, right? And so the QQQ, really the levels here, it's sort of stuck in a very much a bear market. It's got all the way to get back up into here to be even considered around 320 to be considered a 200-day moving. So we're well below that. If we stay below that, expect more downside in the QQQ if we cannot get above 300, 310, 320 zones. Till we get there, I consider this a major bear market in the QQQs. That's where you're looking for weakness into end of year. That's where I think you might be able to get some more sell pressure and really testing those 260, 270 levels to the downside on the QQQ. Okay, now I want to look at the Dow Jones. This is incredible to me. And the more I look at it, the more I'm shocked. We are 5% off of all-time highs in the Dow Jones. For everything that's happened, Russia, Ukraine, the energy crisis in Europe, Europe going through one of the biggest recessions it's ever had. We have China, the COVID thing. We have people locked in rooms. They can't even get out to go eat or work. I mean, the stuff that's happening in the world is pretty insane. And to think that the Dow Jones, which is mostly industrials, manufacturing, warehousing, all that stuff, is considered that's almost at all-time highs. It's only down 5% on the year, while, you have other names down 40, 50, 60. You got, Meta, Facebook down 68%. I mean, you got names down are getting obliterated. And we have the Dow Jones trading at almost all-time highs. So this is a trade I think may have a little bit more room here because we're above this double top. And this is the daily chart, guys. This is what I'm looking at, daily chart. We look at the weekly. We're above this double top in here. It could reject down and sort of retest these lows again. I think that's probably highly possible next year. I don't know if we're going to get it in the short term, but we could really retest this level here. And I think if you get up to the 35,000 mark here, 35K mark, it's probably an area where you'd probably want to position yourself for some longer term puts duration, maybe out 3 or 6 months. I'm really liking the March puts for next year on all really overbought names because that gives you a lot of time for a move to happen. Maybe a move that's trading, a stock that's trading at all-time highs. I'm going to talk through a bunch in a second, guys, right after this. I'm going to talk through some of those trade ideas. But I think March gives you like a 4 or 5, 6 month window to play off of a 10, maybe 15% move to the downside. Maybe you can make 100, 200% on those contracts. So that's a move instead, so you don't actually have to risk money shorting the stock or playing it long. You could actually play these moves through options. And I'm going to talk through how you can expose yourself playing those moves through options where you don't actually have to risk a lot of your portfolio or a lot of your capital. You're only risking what you're affording to lose. And I'm going to talk through those trade ideas shortly. Hopefully this is helpful. The indexes here from an overview where we are. We have the Dow Jones minus 5% on the year. We have the SPY down 15, 18%, and we got the QQQ down about a 30 clip. So that's where we are from the technicals, guys, okay? And it's really important because we have the OPEX coming up at December 16th. And then I'd say really be cautious for more upside because the market's trading at a much higher PE. When you log into your computer and you purchase a stock or an equity in the US stock market right now, you have to realize you're buying that company after these big bear market runs. You're basically saying that I think this stock's going to continue to outperform its earnings. The higher you pay for a stock, the larger the multiple you're giving it. So they have to continue to outperform. And if you believe that they're going to outperform over the next year or two as rates just continue to fly up and the economy is slowly starting to, sort of deteriorate slowly, then that's great. Then that's your thesis. If you think that it's going to go much lower, then you should have maybe some positioning in case the market does come back down to reality and cools off a bit. Then you want to be positioned for that. And I'm going to talk through how you can position for that. Okay. The first couple things I want to talk through how you can position are sort of that March timeline. I think we're going to get sort of a nice 5 to 15, maybe even 20% pullback on a lot of equities / indexes between January and April of next year. And so how I want to position that potentially off the charts is potentially playing the VIX. If you look at the VIX is at 19. Typically, rule of thumb, I've seen in the past couple of years, and I've seen fund managers come on and speak to media. I've seen a ton of interviews from folks. When the VIX gets below 20, that's considered I'm not scared. There's no panic. Everyone's fine. Everything's good. And so I don't feel that way. I feel that we still have crazy uncertainty with China. You have the Taiwan stuff, you have the Russia-Ukraine stuff, you have Europe stuff going on, you've got gas prices, gas crisis over there. You've got a lot of things going on. We have inflation out of control here in the US. And for the VIX to be under 20, to me, that seems like, oh, everything's fine now. And so I think the VIX under 20 gives you an opportunity, as to my point earlier, to potentially hedge yourself in case we don't just magically start to recover all of a sudden in the global markets. So what I'm looking at is the VIX $30 calls for February strike, as well as 35 calls for the March strike. That gives me about 3 or 4, maybe 5 months from now, in case any sort of panic or real selling comes in and the VIX jumps to 22, 25, 28, those contracts will all now be in the money. So it's sort of a hedge. And I would take super limited exposure on this, very, very small, maybe 1% of my account, throw in a hedge. Because if you're long a ton of equities right now and you're just buying stocks the last 6 months, you're up huge. But this is a great way to maybe hedge yourself and make a couple dollars, maybe 30, 40, 50, 100, 200%, depending on when the move happens in the VIX. But we're getting pretty close to the lows. If you keep in mind, guys, this was COVID right here on the VIX, the 2020. The VIX ran from 20 to 85. I mean, that's extreme, right? But even just from the rates, when the rates started increasing early in 2022, we ran from 20 all the way up to 37. That's pretty normal when things start to, have some volatility. The VIX this year has been completely dead, to be honest. I would figure the VIX would be trading around 24, 25 right now. But it's not. And that's also a good thing because I don't know if anyone knew this, but stocks actually trade at lower premiums with options when the VIX trades at lower levels. So this could be an all sort of maybe calculated, manipulative move on the VIX in order to get premiums on names, on the indexes, on Apple, on Caterpillar, on the biggest names in these indexes. The premiums are like 30, 40%, really low, which basically means if you get big moves up or down, those contracts are really going to pay nicely. But if the VIX was at 30 and those moves were happening, you're not going to be able to have as much profit margin because everything's already, super volatile and priced in. So this could be actually a good thing for equities to maybe start positioning yourself because you're going to get some really cheap premiums. So I'm looking at the VIX under 20. The next thing, and I talked about a couple of trade ideas to maybe hedge yourself, the February 30 calls, or maybe the March 30 calls or 35 calls if you're feeling a little bit frisky. Those would be the two areas maybe as a long hedge. And I'd be looking to maybe scale into those mid to late December. Maybe you want to grab a couple before Powell's speech next week or the rate hikes next week. Or maybe you want to buy those maybe into New Year's. That's probably when I'm sort of looking at those. And I want to have some exposure, 2-3 month exposure in case we do get a big VIX spike because I do think the markets are much due for a little bit of a pullback. Now, the next couple charts I want to talk to for this week and basically closing into the next couple weeks in December. I want to start with 5 large caps. Get your pen and paper ready, guys, because these are going to be really interesting names because we're at some serious pivot points on a lot of these. Let's talk through ticker Netflix. I'm sure many know. Probably a little overvalued up here in the 600s. And it got sort of decimated on a big earnings blowout. All the way down to the 380s. Everyone was buying the dip. It was a huge name. People during 2020 were able to get in the 350s. And that was the crash during COVID. You got it in the 300s. Great. So if anyone who's been buying this name over the last 3 or 4 years has been getting it roughly in the 300s. Okay. We then had another absolute terrible ER back in April. And we went all the way down to the 160s, 170s. Okay, so that is now over 100% retracement from the 170s up into we're about at 320 we closed basically, right? This chart has some room up to here, which is 330, maybe 330. And then I think this is where I think I'm looking to maybe scale into some puts. And how I'd play the puts is maybe the 300 strike, maybe a month or two out. And how I'd look to position this is the next maybe pop or two. I'd be looking to scale inputs. Now, what's my reasoning to maybe ride a potential rejection? Is this name on the earnings started selling off at 330, right? So anyone who bought from 330 below is in really good shape. If you bought this dip, you're up 100%, right? There's going to be people that are like, I'm up 100% this year. That's unbelievable on this name. I'm going to take some profits. Then you have people that are saying, thank the Lord, I am break even on this terrible stock. It is a absolute terrible name. It's underperformed. It's terrible. I want out of this portfolio. I want this out of my portfolio. And now they're trying to sell it at even money. That's considered a huge win for them, being down 40, 50%, right? So they're going to say, okay, so you have the people that want to take profits. Then you got people saying, how do I get out of this? I'm finally even money. And I think that's going to weigh on the stock in the next 3 to 5 weeks timeline. I'm seeing a ton of bullish option calls in this name, but I just don't see this going much, much higher. If it does, great. Then my thesis is wrong. But I think 320 to 350 is a great area to potentially scale in puts for early next year pullback. And I think the pullback level here is this. I have some levels in here, guys. The first target I'd have is about 280. The second target I'd have is about 250, 260. That's the targets I'd have on the downside. Now, to potentially play that exposure, you maybe want to look at the February or March 300 puts. Gives yourself about a 5 to 10% premium pull down, and then you could potentially play anything below that. You'd be heavy in the money. So that's how I'd sort of look to play this name. And that's if we continue to fill this gap. If Netflix were to fill that 340, 350 gap, I would be looking at maybe the 300 puts for March. Okay, that's the Netflix trade. If you wanted to continue playing the upside, the 350 calls for like January, February would be an area maybe I'd look to play while hedging for 300 puts. Okay, that's Netflix. This name has had a lot of volatility to the upside lately. It's had a lot of range, 8%, 3%, and 1%. Just 3 days alone, guys. That's 13, 14. That's a 12, 13% move. That's a really big move in 3 days, guys. It's up over 100% off the lows just 4 months ago. So that's an interesting one, okay? Oh, sorry, 5 months ago. So that's an interesting name. Then we have Tesla. All the Tesla Elon Musk folks, all the bulls here. I have some potentially bad news from what I'm seeing on the chart. And this is obviously my opinion and my opinion only, but I just play the price action and I only play charts. Charts tell me how I trade. That's it. I don't listen to the media. I don't listen. It's just the charts. Charts and price action and what the computer algorithms are trading as. That's how I try and maybe scalp a couple bucks up or down. Good news and bad news for Tesla. Good news is it hasn't really broke down to where many believed it was going to go, which is the 140 line, 130, 140 trend line. That's ultimately where I think this name will bottom out at before maybe recovering a lot of its sort of value that it's lost this year. It's down about 40, 45% on the year, I believe. I think it can hit those 140s. The problem I have with Tesla is the whole Twitter thing. A lot of people are sort of giving up, throwing in the towel. And that could be a bottoming signal, yes, of course, but it still trades at a very high premium, 30 to 40 multiple. And I'm concerned that if the economy does slow down and people stop buying Teslas, that this multiple can get shot and we can get moved down to that 140 trend line where I think ultimately it would be a nice trade to getting this name at a 130, 140 clip. Ultimately, this name has been trading sideways, guys, for about 6 months in this little range right here. It's been in this range. So if you bought it in 2021 at a 188, it's still here. You're even money. Anyone who bought in here is obviously down huge. So the ton of funds, I'm sure, probably bought in here. It's down pretty big, down 30, 40% on this name. So you're going to have some tax loss selling at the end of year. You're going to have new buyers come in to have it for the portfolio shining. You're going to have a ton of stuff going on in Tesla. It's going to be pretty volatile the next 3 or 4 weeks, but I do think it stays within this range. Then I think into next year, you might get that final drawdown in here. You could get a move potentially if Tesla somehow gets strong. Maybe it finds I don't see any catalyst for it right now. The Cybertruck that they had last week, I mean, it barely moved up. It barely moved up. It had a big pop, and then it just hasn't really moved. So there wasn't a ton of FOMO buying on that move. There wasn't a lot of selling the news as well. So as I said, it's been sideways. And so this is a name I think to sort of stay away from and put your hands on your butt underneath on your trading chair and maybe not want to trade this the next couple days or weeks or months unless you see this strong move over 200. Then you maybe want to look for the 208, 220 line to ride this up to this wick here. But then I think if you get into that 220, 230 range, I think that's probably where you're going to want to try some puts again, because I do ultimately think we're going to retest those lows, which is about 170, 160 clip. And if things do get uglier next year, I think your 130, 140 clip is going to be on the table as a price target. That is Tesla. So I'm predicting sideways action the next 1 to 2 months per se, followed by a larger move, 10 to 20% up or down in Tesla. The premiums are way more expensive than anything else in the market. And I just don't see the volatility there on that name right now. I'd rather play a Netflix. I'd rather play an Apple, which I'm going to talk to in a minute. My next name is Apple. Apple just had news come over the weekend, guys. Not sure if anyone saw it. I saw it yesterday. They are planning to move production out of China. China is probably the secret sauce for Apple. They make millions and millions and millions and millions and millions of devices via Foxconn and other manufacturers over there. This is either going to be really bad news or really good news. The fact that they're taking a step this early in the measures for China that they plan on getting out is probably good news for investors. But I would say bad news short term, because then they have to then move that manufacturing and potentially cut numbers on guidance and targets. So keep an eye on Apple. You could see some heavy put buyers. You could see some heavy selling maybe on Monday morning. I do want to watch the price action tomorrow morning. This is a name I'd be looking to potentially play. The premiums are cheap. How I'd potentially play this is via puts. I probably wouldn't be shorting via equity with any major size. I'm not putting in hundreds of thousands on a short here. I'd probably be playing it between 5, 10, 15 grand on put premiums if the stock goes down. If the stock roars on the rally, I'd probably want to be selling into strength. So anything in the 150s, I think is a good opportunity to scale out of this name, because ultimately Apple has, yes, outperformed every tech company, every mega tech, all the fangs. Yes, it's outperformed everything. But as of late in the last 2 or 3 weeks, it's actually underperformed the market. And so that to me shows that there's not a lot of buying pressure here. There's actually a lot of sort of exhaustion and a lot of exhaustion on the chart. It feels a little heavier than it normally does. And so for those reasons, I think we could see the 136 trend line get filled again in the short term, potentially even maybe the early 120s early next year. And so that's how I'd be looking at the Apple trade. It has been range bound between 130 and 170. Until you get above the 170 or below the 130, you kind of just are in this chop, I like to call it. That's Apple. Keep an eye. They had the news over the weekend, so price action tomorrow morning pre-market could be essential. And I'd watch that name tomorrow to see which direction we're going. It might get a little volatile. Let's talk through Caterpillar. Okay? This name is absolutely outperforming the market. One of the best names on the market probably for the year. One of the best names on the market the last couple years in terms of outperformance. Back during COVID 2020, we had a low of the 80s, 90s. This name is now trading at almost $240 a share. We're at a big crucial pivot point though, and that's why I think there's a potential, write this down, there's a potential big move coming in Caterpillar. And I think we're going to see a monster move, 10, 15% move up or down here. And it's going to be based on pure technicals, guys. It's not going to be based probably on anything else. Pure technicals. Last time we saw 238 here, guys, we fully rejected and chopped in 1, 2, 3, 4, 5, 6, 7, 8, 9. 8 or 9 trading days, we went all the way down to 200 from 238. That's a 10 to 15% move, exactly what I'm predicting here. I don't know if we're going to hit that level again and just straight shoot down to the 215, 200 zones again. I don't know, but it's on a big run, guys. Since September of 926, this name has went from 160 to 240. That's a really big move. And either we consolidate a couple days, couple weeks longer here, but then there's going to be a time where traders have to decide. They have to decipher. Are we going to blast through to all-time highs and explode to an area on the chart that is never seen before, right? Are we just going to explode into the 280s, 300s? We could. The Dow Jones, I said, is only trading 5% off its highs. This is sort of an industrial name, right? Tractors, plant, all that stuff, equipment, etc. Are we going to explode and go to all-time highs? I think the risk versus reward on this name is potentially playing a pullback that could overextend on a pullback back to like 200. And how I'd look to play this, as I said, is that sweet spot, potentially the March 200 puts. So I'll be watching the March 200 puts for potential play down on this name. Unless we fully clear the 240 with some volume and some real conviction, then I'd probably play it intraday and just keep my stops tight and ride this wave up higher. Okay, that's Caterpillar. It's a very interesting name, right? Because last time we got up here, we fully rejected with major volume down. And I'm just not seeing that major volume down yet. It's getting choppy. So keep an eye on CAT. That is one I've been watching 2 or 3 weeks. As many know who are subscribed to the premium service within the Spud Zone, we've been trying to time this short up top here for about 2 or 3 weeks now. I've made some good money. I've lost some good money on this name. And my entries have been spectacular, up or down. But I'm really just watching this name. It's always on my tape because this is a name, guys. If it starts to sell off, I'll repeat myself again. If this name starts to sell off, and that could be 1%, 2%, the contracts are thin. They move extremely fast. The premium IV level is very, very low, which means it doesn't take much for contracts to really pay out a nice premium if the stock moves. So if you start to see a 1, 2, 3, 4% move on this name, that could be 300, 400, 500, 600% move in the volatility, right? So that's how much you could potentially make, on a weekly contract if these things start to move up or down. That's why I like the name. And it's not heavy. It's very thin. It doesn't take much to move up or down. So keep an eye on this name because this is a name that if the markets decide to rip up higher, it's one you want to be in. If it's a name the markets start to rip selling, it started fading, selling down, this is a name that could really, do well for you. Okay, that's CAT. The last one I want to talk to is Boeing. BA was a beautiful buy, got way too cheap in the low hundreds here. It's now sort of ripping up, trying to retest this 200 trend line. I think at 200, you probably want to look to maybe scale out of this one. Only reason I say that, guys, is basically from 2016 into 2022, the last 6 years, this has underperformed basically. And everyone who bought up in here is down big on the stock. It's a similar trade setup idea to Netflix. So, the past couple of weeks, Netflix and Boeing have had absolute incredible, impeccable runs. But if you look at the chart level here, guys, on the weekly, both of the names look very similar. And I think we're going to be in that same predicament with Netflix. We're going to have people saying, okay, I'm finally break even, or I'm finally cost averaging and I could get out with a gain, or I could get out with a small loss. Great. Then I also think you have people that are like, okay, I bought the 130, I'm up 30%, I might sell some. So it hasn't outperformed, like bounced and retraced like Netflix per se, but the same chart in terms of the fade has occurred. So anyone who's bought really from 2017 here is sort of just dead money. And so that's why it's sort of underperforming the market. Now, keep in mind, the CEO came out and he's been saying some awesome things, 10 billion potentially in free cash flow, which is great. EBITDA increase, which is great. But, if you're predicting travel going down and everything else going down, this is a name that maybe you don't want to be in. So as I say, we only have technicals to show us. I'd like to see maybe a final push to that 200 line. I actually potentially like calls this week on this name, and you might see a potential 200 ripper into the end of year. Anything from the 2 to 220, 230, you got a 1 top, 2 top, 3 top, 4, 5 top, 6 top, 7 top. You have about a 7 top at 220. So I think that would be a nice risk versus reward, holding the 220 puts, and maybe that's for a March pullback as well. As I said, there has been a lot of good news sentiment on Boeing, so we could go much higher here. And that's how I'd probably look to play it, maybe some upside calls. Wouldn't want to chase this rally with shares per se here. Probably want to look to buy those shares back around 130s, 140s if you're looking for the long-term port. This is a name I'm looking to maybe scale out of into the strength, as well as scaling out of Netflix into the strength, because these names have underperformed for so long. That is Boeing. Hopefully those are helpful, guys. That was 6 large cap names. You can always replay this video. We went through Netflix, Tesla sideways action. We went through Apple underperforming the last couple weeks, but has overperformed in general. Went through Boeing, which is on a great tear, but it's underperformed the last 5 years. And the last one I have this is the fun one. Everyone get your pen and papers, because this one I think could be funny and fun. What I mean by that is Ulta Beauty. This one has been an absolute hilarious. I've never seen a chart like this. I'm going to show you guys this chart. This is incredible. This stock, $4 a share back in 2009, 2010. We're at 477. What is that? 20,000%, 10,000%? I can't even do the math. 10,000? I don't know. It's obscene. I mean, this name is up. It's crazy. The move on that name. I mean, yes, that's a decade long of gains, right? Now, keep in mind, look at the weekly chart. We're trading at all-time highs. They had another good quarter, which they already previously guided that they would be up in this quarter and that the numbers were great. And the numbers basically just came just in line with what they upgraded the guidance from last quarter. But this is sort of that thin name. It's a $20 billion market cap. It's thin volume, but it could easily be maybe calculated, pushed higher. So keep an eye. As I say, when things get to all-time highs, there's no levels for traders, right? So in reality, the sky is the limit. So how you trade these names when things get to all-time highs and they're really pushing past, you just keep that trailing stop tight, or you're kind of playing the upside via calls, so you don't have to risk much. But this is a name that maybe could go higher. But eventually, I think it is a little way overbought here. I do think there could be a nice pullback back down to 400, 360 zones. As I said, though, it might not be ready. And this chart sort of, guys, if you guys remember that UPST name that we played, I think was a year or two back, and we caught that puppy at like $30 a share, and we rode that all the way to 400s. That was one of the craziest moves. And it sort of reminds me of that, and I missed all the play down in here in the 100s. But it's up 2, 3, 4x from there. I mean, it's on a crazy move, guys, in just a couple of years. Just from it's doubled its money from 2018. It's been a grinder. So I think we could potentially maybe see higher before a possible big fade on this one, and that's when you'd probably want to time long puts here. That's Ulta Beauty. Clearly, they're outperforming the market. Now I want to talk through a couple of small caps. Hopefully this is helpful. I'm going to get a better read from you guys in the comment section. That we're only increasing viewers, so that's really good. That means I'm not doing a bad job, per se, I guess. Hopefully this is great and everyone's enjoying this and really learning it. I'm already seeing people say, hit the like button. That's great. I really appreciate you guys. But let's talk through a couple small caps because I know you guys have some small cap lovers. So far we've covered indexes. Right? We've covered the VIX being under 20, which is a huge key point, right? We've said that algo traders, fund traders like to sell U.S. equities when the VIX gets below 20 because that means that everyone's sort of feeling okay and the volatility is not crazy yet, and that's a good time to scale out a position. So VIX being under 20 is very attractive for me. And then we talked through the large cap names that have had great runs: Netflix, BA, Ulta, CAT, all trading pretty well in the last couple 4 or 5 weeks. Then we have had Tesla and Apple sort of trading sideways / underperforming the last couple weeks. So keep an eye on those names, right? And then the small cap names I want to talk through, just a few, just a couple recent ones. No small cap names. I don't have any positions in any of these names. Just sort of names I'd look for potential, just charting relative exercises for you guys. Vapo, I believe it's a farmer name. I don't know anything about it, but just via the chart, has a nice little 2-3x gap fill here. And what I mean by that is if you guys look at the daily chart here on Vapo, ticker VAPO, had a nice couple runs here. We've had 34%, 50%, 20%, making a nice pullback down to the 120s, 130s. Now, if this name continues its strength, guys, and its FOMO maybe next week, it has a nice gap up to the $2 range, potentially even the $2.15, $2.20 range, which would be about a 25 to 40% upside from here. And now keep in mind, it has a 3-day monster run of over 100%. So you do have to be careful. It's ran hard from about the $1 range. Actually, the 80 cents range, excuse me. So this is at a really nice range. One second, I just got to grab some water here. I'm running out of breath. Okay. So we have a 1 top, 2 top, 3 top, even potentially 4 top here. And what I'm doing is for the new traders, guys, see these little wicks here? I call that a wick. Wicks are important because that shows you sort of the overbought or oversold. And that could be a wick down or wick up. And when you get to those wicks, those are typically, I like to mark as resistance, heavy resistance points. And when I'm in a position, guys, I want to be scaling out. For me, I like to sell when everyone's saying, buy, this is awesome. Oh my God, it's going to the moon. That's when I like to sell. And those are typically when you form a resistance point or hitting previous resistance points. And same thing with buying. Oh my God, it's going to zero. That's when you want to buy maybe at a support level, or we're getting under those support level. That's maybe when I want to take a stab. So for this particular ticker, we got a 3 top around the 210, 215 zone. So this name could go there. That's potentially where I'd look to be selling out of this name, Vapo. That would be another 20 to 40% upside from here. As I said, it is on a 3-day run. It may need to pull back a little bit. If it pulls back, holds this, consolidates, then we might see a new base form in the 130s, 140s, then maybe finally hit that ripper. Maybe not, maybe not. I'm just looking at technicals, guys. Just giving you guys some examples so you could study. KTRA, another one, sort of a 3-day legger here. 1, 2, 3-day daily cap. 36, 12, 32, that's 66, 68 plus the 12. On an 80% run here, guys, in about 3 or 4 days' time. Another one that has some room, maybe up to the 10s, 11s. Another 20, 30% clipper from here. It did hit almost 950 there on the wick the other day. And on the, looks like maybe a news wick, it hit above 10. So above 10, you have a nice range up in here to the 12s. below 10, it could sort of sit below, right? So once we break through this nines range, I think this would be a name that you maybe want to trade up into the 11s, 10, 11, 12s, which would give you another 10, 20, 30% cushion to the upside potentially if we can get above those nines, guys. So keep an eye on KTRA. This should be, these names I'm just showing here on the small caps would just be for a couple days watch this week that are showing some momentum signs. I'm not saying this is a multi-week thing like the large caps. Those are different types of bigger time frame trades and bigger picture. These are just momentum sort of day trade scalps per se, guys, so you guys can understand what we're looking at. And then from the two big ones I want to talk through this week, guys, two big names for small caps. Keep an eye because there is a catalyst. Ticker MMAT, and you have the preferred shares, which is the MMTLP lockup, which is actually expiring. I believe these shares are expiring Friday. And I've seen a lot of hype around the social media, but this trade has been going on since the 4 or 5s and is doubled and tripled since those timing. I've seen that shorts need to scale out of this trade by Friday when it dissolves. Everyone got these preferred shares, I believe, on the merger or split with, I think, what was it called back then? MMAT. Geez, I can't even think of the name. What was the one before MMAT? What was the pre? Someone will write in the chat on it. But anyway, so I believe these shares dissolve by Friday. So this could give you a small window potential run up. Now, keep in mind, I do believe these names are going to get volatile this week. That is the MMTLP and that is the MMAT. So the MMTLP is the preferred share, which you can buy and sell. And then the MMNT is a much sort of slower market cap. It's about almost $1 billion market cap, I believe. So a little bit stronger in terms of price action and liquidity, easier to get in and out. But these are the preferred shares. So you could potentially see a FOMO run up, maybe see if it retests those 12s, maybe even higher. As I said, this could also sell off hard because a lot of people have been in these shares. They got them for free. So you could see a lot of profit-taking bookings, given the name has run from the dollar range up to the 12s, which is almost a 1,200% increase. So keep an eye on that name. And then the real other, the parent name would be the MMAT, which has also been on a great run from the lows of this year around the 60s, 0.60s, all the way up into the 2s. So we've seen a 2, 3, 4x move off the bottoms here. Still trading relatively above trend line here. If we can hold above 2, there's some major gap upside to the 250s, even the 3s, 3, 4s. So these are two names I think you guys should have on the radar this week if you're a small cap trader. I repeat, if you are a small cap trader, these are two names you probably want to look to watch the tape. Thank you for all the help. Torch, TRCH was the pre-merger name. If you guys remember that run up, I remember playing that. That was a fun run up. I think it ran on like 12s pre-merger. That was a great trade. But yeah, so keep an eye on this name. It's trading actually relatively pretty well over the last sort of year, actually 10 months. MMAT in a nice trading range here. And I think it could get some upside 250s, 280s. So keep an eye. If you start to see momentum come in, how I would trade this name is I'd be trading this with a tight stop loss. So if I take an enter and I see momentum, seeing a ton of buy volume come in, I'd probably look to jump in a bit, maybe on a little small dip, and see if I could ride this higher with a stop at my entry. And this is obviously a trade if you're just day trading it like me. I'm not here for the long term. I know a little bit about the company, etc., but this isn't a long-term investment for me. It's just a trade momentum for the week. As I said, those shares on MMTLP are dissolving, I believe, Friday. I could be wrong with some of my terminology, and I apologize if I am. I'm sure people will help in the chat or in the chat rooms. There's a lot of people that are in these names for the last couple of years that could probably have much more information on them, but I'm just looking at these as a trade, guys. And there's a tight window, right? I'd probably look to be scaling in and out of these names for quick trades, maybe Monday through Wednesday, possibly an overnight swing or two. And then I'd be looking to get out because I don't know what's going to happen that Thursday or Friday. If things sell off, if the news doesn't hit correctly, if the news does hit correctly, it could go higher. I don't know what the heck can happen. I've seen crazy things, up 50%, down 50%. So I don't want to be involved in any of that. I'm just looking for a potential, maybe a little run up Monday, Wednesday in these names. Let's keep an eye on those names, MMAT and then MMTLP. Hopefully that's helpful. That's the small cap stuff, guys. Now I'm going to jump into Q&A. We've done 40 minutes as I promised. Actually, a little over 43 minutes here, guys. I apologize. I'm 3 minutes over. I do want to run through some quick Q&A. I have 10 minutes left. Then I got to hop off for another thing. But if you guys want to give me some Q&A for 10 minutes, hopefully this is really helpful. If you guys want to, start commenting in the sidebar chat, or if you have to jump off, great. But please do give a like or comment as well as if you want to check out the Discord, subscribe if you thought the information was really helpful. As well as you guys could jump in our premium Discord. You can see all that as well. If not, I'd love I love positive feedback, negative feedback, how these sessions could help you more. But leave that after. Let's get to the Q&A first, guys. If you just want to write in the sidebar, I got about 9 minutes. Okay. I'm trying not to go through specific tickers. I don't want to take up anyone else's time, but any sort of trading questions, anything trading related, or charts or what I look for, or things like that. Any type of questions at all, guys, just shoot away. I'd be happy to answer. Based on my experience and what I've done. If I don't know the answer, obviously I'll just say no. What's your take on CHPT, Roddy? What's going on? I think it's a great. I really actually like this name long term. I just don't know where it's going to bottom. It's trading at pretty low right now. Their earnings were pretty good. They're growing at 100% year-over-year clip. I like the earnings Friday. I think analysts were sort of on the fence on both sides, bulls and bears, and that's why it didn't really trade too well. It's kind of flat around 4%, down 4%. Could it have some more downside in a bad market? Of course. But I think if you're investing in EVs in the future, I mean, they've been doing EV charging since 2007. They're the world's largest EV charging station. It ran all the way to 30s, 40s during the pandemic, and now it's back down to 10, 11s. If you're looking at a bigger time frame, I like it multi-year. If you're looking at a short-term trade, weeks by months, it may be a sideways here for a little bit. But I took some calls out for a couple months in March, as well as some in January, and maybe we get a nice little bounce on this thing. I saw some heavy hitters in the 20s and the 18s earlier in the year. So I don't know if all those are way out of the money. So I don't know if this name maybe gets a little end of Santa rally or not. But I'm looking for potential bounce on that name if EV strength continues. What else? Thanks for the session, Great. What catalyst would move the markets up? You saw Jerome Powell. I think the biggest catalyst that would move the markets up are like 2 or 3 things, really. If the war in Ukraine and Russia ended in a peace treaty or something of some sorts, I think the markets would rip 1,000 points within minutes. I think that if Powell decided we're never going to raise rates again, or we're going to cut rates, that would rip the markets. And then that would maybe if China starts reporting really good GDP growth, which I don't know if they're going to jump from pandemic to crazy GDP growth. I don't know. Maybe if that were to happen, those would be the 3 catalysts in my mind that I just immediately think of that could really rip the markets up. Right now, you're trading at a very reasonable PE, or maybe a little high PE, depending on your trade thesis. You got bears and bulls, obviously, at funds competing on each side, saying, no, we should go much lower. No, we should actually go higher. So we're sort of in no man's land right now, as I said, at that 200-day moving average. So those would be my catalysts for potential move up. Hopefully that's helpful. What else? Ham Chop, you were high on APVO a while back. Have you heard anything recently about them? No, it was just a really oversold biotech I really enjoyed, and there was a lot of people taking large stakes in the company back then. I think they had some issues with one of the stakeholders going solvent. I think he had to sell out of the stake, so I think there was problems with that name back then. But it was a really nice chart. I think that name ran from like $5 to $100 back then. That was a crazy move. What type of day trade do you like doing other than options? I trade small caps, Pablo. I trade small caps. I trade med caps. I obviously trade options as well. I'm starting to get into more bigger picture, larger size options like multi-week, multi-month. A little less stressful to trade, and it gives yourself some more time to make some real profit on the trade, if that makes sense. So the trades I was talking about earlier in the session, when looking at names like Tesla, Apple, BA, Ulta, CAT, names you can maybe start to scale out of. The gains aren't crazy. You're not going to make your 50 to 100% like all these gurus, everyone, whatever you want to call, or posting on social media. They're making 100% gains in 2 minutes. Those are like, it's full on gambling if you're just doing the ODTE stuff. But if you're predicting a move over a couple weeks or a couple months period, you can make some serious coin. Just creating that move or finding that move before other people do. And that's what I'm trying to sort of branch into and look into some of those on the longer term option stuff. But from day trades, I trade everything under the sun. Options, small caps, large caps, whatever the momentum, wherever the liquidity is, that's what I like to trade. I'm an all-purpose trader. What is your opinion on IOVA, Pablo? I'm not going to run into particular tickers. I don't want to waste everyone's time, so I'm going to keep the comments here. I got about 5 minutes of Q&A. Hopefully it's helpful. Huge inflation could maybe attribute to the rise in share prices. This is Ty Chadwick Carter. Not sure. I think we're just in a really technical bear market rally right now. Strong seasonals in November, December, typically every single year. So I wouldn't overlook it. I think a lot of it is algorithmic and just technicals. I just really wouldn't overlook what's going on right now in the markets. I just would kind of just play what you're given. And that's, up or down. That's sort of how I'm looking at it. Any Dow Jones ETFs gravitate towards, recommend given its recent strength? As a trade, I think the Dow Jones could retest those highs. I don't know, Mark. We just went through the Dow Jones chart and it's outperformed the market completely. But as I said, right, everything we've been through this year and that Dow Jones is only down 5% seems like a magical gift. So I'd be a little skeptical here playing more upside, buying in here. I think, when you want to be greedy is when, things are crashing and everyone's saying, oh my gosh, everything's going to zero. And that's typically when you want to step in and do some holding the nose and closing your eyes and maybe buying for the long term. And, that's how the richest people in, world or the biggest traders have ever made their trades is when, when things are drastic overbought or drastic oversold. So I'd probably sit on some time waiting for potential great life-changing opportunities like that. Love this, Alvin Elliott. Love this channel. Thank you for the info. I'm a new trader, but learning at an incredible rate. Keep it up, Alvin. Yeah, keep learning, man. It's important. I think the biggest thing for me when I was a new trader and learning was when to cut losses, and it's always a really challenging thing if you're new to trading. Not everyone loves to lose, right? I mean, who wants to lose? But the reality is as a trader, that was the biggest thing I've had to learn is when do I cut losses? And the longer I held on to things, the more hopium. When I was a new rookie trader, I didn't know what stop losses were, and if I had a mentor, or if I knew how to cut losses, and it sort of just came natural to me, I would have saved myself so many blown accounts early on when I traded, and just a ton of different things. But now, I have risk mitigation. So it's, when how much capital you can risk on a certain trade, you have percentages in your mind. So once you get to that point of being able to cut losses or when to actually take profits, your trading capabilities are going to just go through the roof, and you're going to be so much more consistent. So hopefully that's helpful, Alvin. Keep it up, man. It's great that you're getting into trading. Really cool. Roddy, appreciate a great session. No worries. Stormy Berman, thoughts on crypto? Thoughts on crypto. I don't even know if you probably want my thoughts on crypto. I've had the same thoughts for the last year, and all this FTX stuff, and even previous FTX stuff with margin calls and random stuff. I think there's so much liquidity and forced liquidity in that area, and now there's no liquidity, that it's sort of a disaster to be in right now. I do think that there's going to be another big drawdown soon. I don't know when. But if you get another huge drawdown in crypto, it's probably a good trade opportunity to potentially get in some of these names that have equity focus in the US, or just, trading crypto itself. If Bitcoin gets down to the 8K, 10K, 12K, I think that's probably where I'd love to jump in for a trade or trade around it via maybe some crypto names in the US equity base, like a Coinbase or Mara or stuff like that you can maybe make a trade on. But I do think there could be another drawdown just from all this speculation and liquidity being tight and stuff like that. I don't know. I'm just predicting potentially there could be another drawdown in crypto. So I'm not jumping in just yet, even though it does seem very cheap. Could be totally wrong, but it doesn't seem cheap enough for me. I don't feel the panic yet. It's just there yet. Do you think Webull edge short, Sniper Trader, you think Webull edge short locates for hard to borrow small cap stocks? For people who like to short small caps. I wish, man. The one problem I have with Webull, and I've tried to ping them about it, is just why shorts are not, why shares aren't available to short. I mean, they're a great brokerage. They got a ton of stuff going on. I just think, especially for the larger float ones, obviously micro float small caps, you're not going to be able to get shares really anywhere. Maybe a couple funds that charge you an obscene amount of money, and then you got to really time it well because you're going to lose money on the fees. It's a mess. But, for those, sometimes I do get frustrated with Webull because you can't short a lot of stuff. And there are some really good opportunities to potentially jump in a short when something can really retrace 10, 15, 20% in a small sort of day trade environment. So I hope maybe that will come in the future. It's a bit more complex, I think, on the back end for them than it is for us just thinking about it. But yeah. Bella Vaccaro, any thoughts on Lucid? Just from Lucid, I think they had a big offering, right? Or equity raise or capital that they needed. So that name's probably under a little bit of pressure. getting a little bit diluted maybe there as well. So I think it's probably underperformed just without looking at the chart. I imagine it's probably underperformed the last couple of weeks. Don't know anything about the long-term aspects or things for Lucid, but obviously I know it's an EV thing. But I'm not bullish or bearish on it. I just remember I think they had that equity thing. Any tips for super small accounts, guys under $1,000? Drifting shade. Yeah, drifting. I mean, I have in the premium Discord, I have a channel that's brokerage recommendations and sort of the how to do it. And there's actually some ways. I always see the excuse. I have a ton of students that like, hey, Spud, I'm under 25,000. How do I day trade without it? How do I day trade under 25? And there's some ways. You can do two things. You can open multiple different brokerages, right? And have $500 in each account on like 4 different brokerages and do 3 trades a week, which would be 3, 6, 9, 12 trades per se. That's just an example. So you could basically unlimited day trade doing 3 a day, 2 or 3 trades a day. Now you could do that, or what you could do is if you had a $1,000 account, you could do like $100 trades, and that could be options or that could be shares, and slowly starting to build base hits. People. It's so easy to just look on social media and be like, oh my God, I wish I could do that. I wish I could do this. The reality is it takes years for people to build up these accounts or strategies. And people to realize don't understand how much hard work goes into a lot of this. It took me like a year and a half, 2 years to really hit the gas pedal and really just get in that gap with my account performance. And it takes a long time to like get into that zone and get into that move. And I think with small accounts, people always go for the home runs, grand slams, rather than sort of those small base hits. And that's what I teach students daily, like how to make base hits, 5, 10, 15% trades. If you want to go for those 1,000%, 100% movers, you're going to hit maybe 1 out of a million of them. The reality is you'll probably blow up 100 times before you actually hit one. And so I think it's more important is to really just go for the small base hits and build consistent trade thesis over time. That's really what I preach and teach, and that's sort of how I have done well over the last few years. And so I'm going to continue to do that strategy because it works for me, and I'm going to continue teaching people on how to sort of navigate that. So hopefully that helps with the small account question. Mohit, I'm going to stay away from the specific charts or ticker questions. So Mullen or H Helbiz, those are small cap names running. Those are micro small caps that have had some runs recently. Do you ever buy these shorts, those leverage ETFs as a hedge? No, but if you don't know how to do options, RLG 222, that's a great way to trade the market. If you're thinking there's downside potentially to come, you can trade tickers like SPXS, which is a 3x leverage to the downside on the SPY. So if the SPY's up 1%, that's down 3%. If the SPY's down 2%, that's up 6%. So that's an easy way of just buying and selling stock. So SPXS, SDOW, SDOW, and then you have the SQQQ, which is the opposite of the QQQ. So those are good ways. If you think there's downside coming, that's just how you can scale in and out of a position in those names as a leveraged ETF. That's like a very volatile volume-based ETFs to short. So those are names I'd probably look at to short if you're uncomfortable trading options. What else? Nishant Gupta, how about puts on XPEV Neo, Chinese EV after New Year's? Those are tricky names. I mean, those names are up 60, 100% in the last month, some of those names. So it's pretty insane. The China stuff for me seems like it bottomed and blew up. I do think it's due for a pullback, but as I said, I don't know when, because these China names did get really absurdly cheap. Cheapest they've been in decades. So it's tough to be like, let me go short it at like lows. And some of these names got so cheap where, as you can see, someone finally said they're so cheap. Some of them are up 100% in a week. I mean, XPEV was up 100% in like 2 weeks. So some of these names got so dirt cheap that you just had to step in. And I don't think it's ready yet potentially for riding short on some of those China names. We have Chris Hagdorn. Could you do a video on how you put in your entries and stop losses, etc.? I have a problem cutting losses. I posted a picture of my Webull setup the other day. I think it was yesterday. If you go through that setup, on the right-hand column, every single trade I make in a small cap or buying or selling stock, I have a 5% stop loss and a 10% profit take. And every time I purchase a position, that goes in through automatically. What's nice about that is if a drastic move quickly happens, I automatically stop out in the position. If not, in a consult, I can move up my take profit. So I can just continue to move it higher with the stock, vice versa, right? Appreciate that. Hopefully that helps, Chris. That's sort of how I look at Ian Williams. Get those likes going, team. Much respect, Spud. Thanks, man. Glad you enjoyed the session, Ian. Thanks for jumping on. Mark Dickerson, yeah, Webull doesn't allow trailing stops on options either. Yeah, Mark, yeah, I understand why. The ODT stuff's tough to do that. Taylor Aldrich, do you have any oil-related tickers to watch or trade? OXY, the Oxy, would probably be the way I'd trade the oil stuff. I'm not a commodity trader, though. I don't have much experience trading commodities, so I try to stay away from it, and I don't really trade that stuff really ever, maybe once a year, max, if there's like a momentum up or down. I'm not so familiar with that area or sector, so I don't really know how the price action works. So for that reason, I just don't trade when I don't really know. Do you know anything about Surge Trader? Basically a firm that you prove to and then they find an account for you. No, Shane Miller. Sounds like a prop shop, though. There's a ton of prop shops out there that'll give you some liquidity if you put in your own, and you sort of have to prove your worth as it sounds like what you're looking at. But no, I don't know Surge Trader, but that could be an interesting way for day traders. Cool. Cash account is great for under PDC. How about Strangles? Expensive, but you don't have to be directionally right. Yes and no. If you're predicting a sideways move, like I think Tesla Strangle could be good. Collecting premiums on calls and puts over the next like 2 or 3 months could pay out really nicely if you don't see a drastic move. Pastor Don, thoughts on when to quit your 9-to-5 job? When you feel comfortable and I guess maybe you have a strategy on I can wake up every day and I think I can really do this, or maybe your past performance over the last few months or maybe even a longer time frame, a year, has been like, it's been great and you're doing well through all this chop and you're able to get around it, then obviously maybe give it a shot. I gave it a shot when I was in a good little groove and I just felt like I had something really good going, then I needed a ton of time to attend to, and it was the best decision ever. I don't think I ever want to go work for anything else again, unless I'm potentially doing like my own hedge fund or working for someone that has a fund or trading a portfolio or doing something much bigger than what I'm doing now. That would probably be the only opportunity I'd love to do, but maybe to gain more experience doing that. But other than this, I love teaching and coaching, and that's when I went full time, and it's awesome. So yeah. Hopefully that helps. Bella Vaccaro, great video. Join the Discord today. Awesome, Bella. Happy you came through. Welcome. Keep an eye on Made Trading Floor and Options Trading Floor throughout the day. Those are the two channels that just are absolutely really active with awesome traders. Awesome, guys. I'm going to shut it down. We're a little over 3. Thanks for the 100 of you staying on. I think we almost hit 200 viewers today live. That was great. And I know we usually get thousands to eventually watch the videos. It was a weird time of day. I appreciate you guys. You guys can follow me on Webull. That's SpudZone Official on Webull. I have about 55,000 followers there. I post quite frequently. You can follow on StockTwits, around 25,000 followers there. That is at SpudZone Official. And then as well as you could follow us along the Discord. We have an options team, as well as me and a couple other full-time traders and mods. Thanks for joining, guys. I will post later. I got to run. But really appreciate this session. Hopefully the pivot points with the indexes and talking through the VIX and things like that, as well as some maybe lighter positioning going into year end, followed by some volatility in the new year. I think there's going to be some really awesome life-changing opportunities coming up in the next 3 to 5 months, and just want to be here before they happen and want to be positioned for them. So awesome, guys. Have a wonderful day. Enjoy your time off, and we will see you guys bright and early. I think we got a big trading week coming up. Later, guys. Cheers.